All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. So I don't know about you, but I'm ready to get this analysis going. It's going to be crazy today. It is nothing short of craziness happening today. So what we for those of you that are new, and there's obviously today non-farm payroll days, I always have a bigger audience than normal. Interest rate decision days are the same way. We just, things are going to be obviously a little crazy right now. So, and we've got, a lot of work to do ahead of non-farm payroll. So what we do is we go through the analysis of all the major currency pairs, put out our support and resistance levels based on, whether it's trend line, fib level, whatever. And it's usually some sort of culmination of data points and whatever. We type them down as our support and resistance levels. Support and resistance levels are the levels that we need to pay really close attention to as the market approaches them. And it's not a place necessarily to buy or sell a currency. It's where points of interest are going to be as we navigate through the markets throughout the course of the day. And usually we develop some sort of bias, like a neutral bias, bullish, bearish, whatever. Now, my charts stay the same every day, so I save them, and we can kind of see what we've done, the next day versus what we wrote down the previous day. And so here's the euro dollar, and as you guys know, the euro dollar is in a very tight range. We are obviously, because of the cable last night, we probed through some support. Now you might look at that chart and that candle and this daily candle and the euro, go, Blake, it's a hammer, holy shit, or excuse me, holy crap, I'm gonna get long here. Be careful, this is pre non-farm payroll. Post non-farm payroll, this candle can look a lot different. It could be bright green and way up here, or it could be bright red and way down here by this blue line. So don't get too excited about what you're seeing just yet. What we know thus far is that we are probing, the wedge bottom. Okay, we're probing the wedge bottom. We broke out of this range that we'd been dealing with for the last few days, and because of the cable threw in some unnecessary volatility into some of the other pairs, obviously. So just keep that in mind. Now, in my opinion, we do have really major support coming into play, and that comes in, right here. By the time we get there, you're talking about 110.80. All right. Now you can also say, that is also horizontal support right here, roughly. Minus this little spike low that we probed through there. And we're going to have a lot of support as we come through here. Now, what else I'd like to do is I'd like to take this last move, so take the low to the high here, and I'm just going to, put in a simple fib just to make sure that we're, it coincides with something. All right, so the low to high, you notice that we held the 618 retracement. Now, the scary thing is, in my opinion, is if we break this blue line, then, the next support the fib support doesn't come in for a while. All right. Now, if we go all the way down to the spike low, the 618 is the trend line low. So that makes it that much more important today. Do you see that? Right there. That means 110.85 is major support. When I put in an asterisk, that means it's very important. Like, not a little important, it's very important. Okay, so $110.85 major support. Resistance right now. Let's assume we have a weak jobs report. Okay, so we post now based on the ISM data, especially the services data. I think the whisper number is probably closer to 200,000 jobs, maybe 190,000 jobs. So, like, let's say we print 150,000 jobs. Let's just say that's kind of a crappy data point, in my opinion. We're probably going to rip back up towards 112. We might actually make it back up towards this resistance. I would say that 112. Well, today 112.50 is major resistance, right? Okay. Now, I doubt we're going to scale above 112.50. As a dollar bull, which I am, uh, I can only hope that we make it to 112.50 over the course of the next 2 days. All right. So in other words, if let's say we have this is kind of what I'm hoping. I was talking to um, another trader yesterday, and I was really hoping for today that we get a kind of a weak piece of data. I really hope we get like it's not going to do my account well today, but it'll set up for some pretty good trades over the course of the next couple of days. What I hope for is, we print 150,000 jobs. We do this over the course of the next 2 days. We hit that resistance on Monday, maybe Sunday night, Monday, and then we can go short up there. That's how I'd prefer to trade. Now, unfortunately, the data, the ADP data is not too bad. The ISM data is very strong, and I'd put my money on ISM any day of the week, especially the employment component of the services data this week was really strong. Chances are we're going to have a pretty decent number, and I think that's what's put the dollar in such demand over the course of the last couple of days. Now, if we have a strong piece of data, do we have enough oomph to make it below here? I don't know, but in my opinion, we could, and it's possible. I think people are really worried that the Fed is going to raise in December, and maybe could say, "Screw you, Donald Trump." Janet Yellen could say, "Screw you, Donald Trump. I am not a politician's puppet. I'm raising rates. Go stick it and raise rates ahead of the election." Now, I don't know if that's going to happen, but I'll tell you what. If I was Janet Yellen, and all that crap was being talked to me out of from Donald Trump, I'd be thinking, maybe I'm gonna get a consensus here at the F1 of the committee, and I'm gonna get us to raise rates because we should, because we might be overheating. Here comes inflation. She can make up all the excuses she wants, but personally, I would take offense to some of the things that Donald Trump has said about Janet Yellen. She said, "You know what? Oh, you want me to show you I'm not political? Oh, yeah, I'll raise rates right before the election. How about that?" Now, I don't really think that's going to happen, but you never know. Never know. Never know. I think the dollar could get some tailwind here. So I'd rather see this happen. I'd rather short up here. I don't know if that's going to be possible, frankly. Okay. All right. Let's go over to where am I at? Okay, so already got the cable. We are in a range environment, by the way, because as you can see here, we're clearly in a range. Right there. Now, if you go over the pound, now everybody knows I've had a bearish designation pretty much every day since we've been below 135, and as long as we're below 135, it's bearish. And I've said this pretty much every day, that we've been consolidating at 30-year lows. There's a lot of people trying to buy the pound down here, and even though I've played counter trend the pound long over the last couple of months, I've from time to time I've gotten long the cable. For the most part, I trade the pound to the short side because the simple fact has been we've been consolidating post Brexit below 135. It's bearish. You're going to hear the same thing from me from here on out while we're below 125. As long as we continue to consolidate below 125, there's no way I'm getting long the pound. All right. Matter of fact, we would have to get above, at this stage in the game, we have to get above 128 for me to even think about getting long the pound on any crosses. I have had so many questions from you guys about, hey Blake, should we buy the pound Canadian? Hey Blake, should we buy the pound Aussie? Hey Blake, how about the pound New Zealand? And I'm like, nah, nah, nah. And of course, yesterday of all days, I say, you know what? I'm gonna get, yeah, that was stupid. Way to go, Blake. On the day that we crap the bed, the literally hours before, I get long the cable. Yeah. So I'm going to tell you right now, until we get above 128, I'm not going long the pound. And I had told you guys for the last several months before Brexit, I'm like, hey, if we get to 125, I'll get long the pound. Yeah, that ain't happening anymore. I'm not doing it. Unless it's just in and out intraday, I'm not doing it. Like, for me to establish a position in the cable at this stage, we're going to have to see 112. Now, you're probably thinking to me, wow, Blake, that's crazy. Is it? Is it really that crazy? Is it really that crazy to think that we can't make it down here? Is that someplace that we've never been historically? Because now, because we broke down and because we're holding down here, I think there is the shot of getting down to 112. So I'm not doing it. You guys can do it all day long, as much as you want. Have at it. Your prerogative. Your trade. I'm not going to tell you what to do. I'm not licensed to tell you what to do. I gave up my stock brokerage Series 7 in 1997. I let it expire. I'm not a licensed broker. I can't tell you buy this, sell that, buy that. I'm just telling you what I'm doing. And I'm telling you, I'm sure as hell I ain't buying this thing until it gets back above 128, or if it gets down here to 112. I ain't doing it. Have fun, you guys. Have fun. All right. I do think that we have to get above 125 today to even take off the downside pressure. Personally, I will write that down for today. Resistance, 125. You saw it in Asia. We went to 124.70. I think we have to scale above 125 to just take off the downside pressure for today. I do think it's possible we do hit 120. Now, not necessarily today. I think today we'll be lucky if we make it below 122, even with a strong NFP. All right. I will write down the spike low that we just had in European trade. We went to as low as 122.26. I don't think we should expect much more than that, even on a great number. Like, let's say we create 220,000 jobs. I think 122 and a quarter is probably the easy money to the downside has been made. Sorry, I hate to right at this for today. I mean, unless you were short overnight, it's easy money's been made. Now at this point, it's going to be quite volatile, and like I said, I'd be surprised if we get much below 122.25, maybe 122. And remember, we're going to overshoot a lot. There's a lot of overshoots here. There's going to be a lot of volatility, so we may spike up to 125.10. We may spike up to 125.10 and then back down again. Or we may spike down to 122 and then bounce feverishly. I don't know. I'm going to tell you for me, I'm not touching the cable from here on out. I was lucky enough to make back some money, so, I'm going to just leave it at that, and I'll deal with other currency pairs. Okay. All right. Let's continue on. So here's the Swissy. Now, have you guys seen the Swissy? Because you should. We are at the OMFG. We might actually break out of this channel level. Yeah, we're there. If I was short the dollar Swiss, I'd be really scared. Because if we plow through this resistance, we're probably going to see like 102, 103 over the course of the next couple of weeks. Keep in mind that the Swissy broke the multi-decade trend line, okay, and we've used that as support on many occasions, and we have this parallel, the parallel line that's now channel resistance. Yeah, we break above these highs, and there's not a lot stopping the dollar Swiss, and we're there right now. We close above 98.30. We're at 98.22. We close above 98.30, which is the high from a couple of days ago. We're probably going to be breaking out. I mean, I have to write down the resistance of this high the other day at 98.85. I have to write that down because that's the only other visible resistance I have. But we're getting close to breaking out. Now, this is not the only currency pair, by the way. There's so many that are in the same boat. So just don't think that we're just looking at the Swissy going, oh, yeah, it's just a Swissy. No. Go look at the Swedish krona before I get there. You want to see a breakout? Go look at the Swedish krona. I'll be back in a moment with that. All right. So we're a support. If we have a weak number, then we're going to come right back down here where we've been targeting all week, right? We were writing down 97.40. Well, we went to 97.32. Not bad, right? So, let's see, look at this. Plow through that trend line, plow through that resistance. We get a strong number, and if I was short the Swissy, I would be scared. I really would. Okay. 97.30 is support. And we are in range, but we are threatening to turn bullish today. Not tomorrow, on Monday. Well, I won't be here next week, but next week this will go into a bullish trend if we break out to the upside. Okay. Dollar yen. So here's the dollar yen, and I did buy the dollar yen last night. I picked it up at 103.57. I'm up like 10 pips right now. Nothing to write home about, but as you guys know, I'm very bullish the dollar yen. I blogged about it a couple of weeks ago, how bullish I'm getting. I told you all the reasons why. And by the way, if you guys haven't seen it, if we have a strong number, here's the 10-year bonds. If we have a strong number, these bonds are going to break down. If we have a strong number, here's a 30-year. Bonds are going to break down. If bonds break down, what do yields do? Yields go up. If yields go up, what does the dollar yen do? It goes up, right? So bonds are on the cusp of breaking down. The dollar yen, coincidentally, is at possibly going to break out. It's a complete inverse relationship of the ZBs and ZNs. So if bonds break down, the dollar yen is going right through 104.30. You understand that, right? That's major. We are bullish near term. We have been. Support 103.35, and I'll write down 103. I think the same numbers we wrote down yesterday. 103, 103.35. I'm trying to get a lot of this stuff done quickly, guys. I just realized, I just looked at the time. We got to do this quick. Dollar Canadian. Now, if you're short the dollar Canadian, you are officially in the danger zone right now. And that's not Top Gun danger zone. You are in the straight up danger zone of getting hurt really bad. Okay. We are, you know what I just realized? Some of you don't even realize what I'm talking about when I say that, Top Gun danger zone. I think some of you probably, you millennial types are probably going, what the hell is he talking about? Google it, kids, Google it. All right, so the highs here are 132.96. If we break 133, this dollar Canadian is going to go parabolic. You do understand that the dollar Canadian has been going up as crude oil has been going up. That's not good, because if crude oil, which it did overnight, backed away from 50 bucks or 51 or whatever, if crude oil starts to head lower, this thing is going a lot higher. Now we do have Canadian jobs report too. It's not just a, U.S. what happens in the United States and what happens in the dollar happens. We have a Canadian jobs report too. So keep that in mind. Now I think that support, if the dollar Canadian can break below this, I shouldn't have used that line. I'll use a. If we can break back below here, 132.15, that'll take us back down towards 131 and change. Then you would be out of the danger zone if you guys are short the dollar Canadian. I think we got to get below 132.15. It's not a great support, but it is. I think it will kind of change the structure of the dollar Canadian. We break above 133, this thing goes straight up bullish. Okay. I'm going to squeeze out the Kiwi really quick because the Kiwi is easy. It's easy analysis. I'm short. Most of you know that. We just hit a 127% extension of the neckline to head. We wrote down yesterday at 71 and a quarter. Remember yesterday? 0.7125. Look at the overnight low. 71.21. Not too shabby, right? That's support. Actually, I'll just write down 71.20. I'll write just 71.20 just to make it easy. Because if we break below those lows, then we're on our way to like finish off this head and shoulder pattern. Now, what the best thing that you guys can hope for is we get a weak NFP. We bounce back to 72.20. Just above that 72 neckline, get back to 72.20, which is that previous support, and then look for a short up there. I don't want that to happen because I'm short the Kiwi, but for those of you that aren't, I think that's the best thing that could possibly happen for you is like, man, I hope I get to reload my Kiwi shorts up there. Them's Greek gods be singing, and I'm not going to sing the Greek gods today. You guys are lucky. It's Friday and I don't feel like it. All right, this is bearish. I'll be back in a few moments. When I come back, I got to go get some more coffee, and we got to finish up the Aussie dollar index, peso, Swedish krona, Norwegian krona. Don't go anywhere. I'll be back in a few moments. Thanks everybody for being here. TGIF people. I almost started singing. You lost that love and feeling, and it was going to be brutal because it's 5 o'clock in the morning here, and I've been up since like 2 something, and you know how great my voice is early in the morning. You guys are so lucky. You're so lucky. I can't even tell you how lucky you are right now. So lucky. All right, let's go over to the Aussie. I will have mercy on you today. I will not sing. Scott says, I have all your CDs. Gary said, Greek God's good. Tom Cruise, no. Okay, all right. Enough of that. So as you can see, our little support zone for the Aussie dollar has held very well. I mean, we've had all this drawn out the last couple of days. Look at how well we're pivoting off of there. I want you guys to know that we're in the middle of the triangle in at the apex. Now, I'm going to say this really. I'm going to say this. I said it yesterday, but I'm going to say it again, and I'm just going to do it real quick. I do not know, aside from me, and maybe there's 1 or 2 others out there that have mentioned it. I don't know anybody that's bearish the Aussie dollar. Any traders I follow, anybody I talk to personally, anybody that any bank research I read on the Aussie is everybody expects the Aussie to turn here. Expects that this has been a really steep decline, and we're about ready to we're turning the corner. We're going to have a head and shoulder pattern going the other direction, and we're going to go get bullish. I feel exact opposite of that, and think that we're going to break out of this triangle on the downside. I think it's going to hurt a lot of people. Now we are in the apex of the triangle right now, and we're not at risk at this moment for breaking out. But obviously, after today, we could be at the upper end or lower end of this triangle. So, you know, I can't ignore that fact. So I think from where we're at the 75.80 level, we will have resistance on any move back up towards 96.40. Okay, or 76.40. We are in a range. We're in the apex of this triangle, which is nasty. It's a nasty trading range. I mean, trying to get directional here is near impossible. Support, we have the 618 down here at 75.41, but I don't really care about that right now. What I care most about is 75.20, which is the massive triangle support that comes through here, right? Right. So it's 75.20. Whoops, 75.20. Okay, that is major support, by the way. If for some reason we break through that, then you have to realize that the Aussie is going to go, it's going to shift to a bearish designation if we break below that 75.20. All right, let's go take a look at the dollar index. By the way, my colleagues at Forex Analytics have closed out some of these patterns in play because ahead of non-farm payroll, just FYI. Dollar index, so here we are, the Dixie. Now, funny thing is, we stopped here yesterday, right at resistance, and then the pound happened and pushed us right through the resistance. So now, if you take a look at the dollar index here, let's get rid of this. We don't need that right now. I will keep this for now. But if you look at the dollar index now, we've broken out of our triangle. Okay, if you go, what triangle? This one right here. Okay, there's this red line here. This red line here. Triangle above the 786 retracement. We cleared it. So our next resistance comes in at, this horizontal resistance comes in at 97.55. Now the dollar index is bullish. We've been in a range designation for a while, but now that we've broken out of this triangle and we look like we're making our way up to the upper end of this this channel towards 98 and above, we're gonna have to go bullish for a while. Okay, unless we come back below 96.50, which would be the breakout point, 96.55. Which, if we have a weak number, we could be back down there. We could. Hold on one second. Excuse me. All right. Peso. So yesterday, you might remember the donkey. Come on, donkey. Take the carrot, donkey. Take the carrot. Oh yeah, of course the US dollar Mexican peso is bearish right here. Come on, donkey. Don't mind the cliff that just falls and there's nothing below you. Don't worry about that, donkey. Yeah, we were coming out of a descending wedge that was turning bullish, and we were here yesterday, and we are now making our way out of that wedge. So what that does is it puts this resistance back into play, which is this previous support or previous resistance, current support or was support, which is a very high traffic area now, which takes us back up towards 1945. All right. Now, big support is right here. If we break below 1915, we should see 19. Now, remember, this is a double top, extension takes us down to 19. So if we break below here, we negate this descending wedge, and so in other words, what I'm trying to tell you is if we break through here, we should hit 19. Okay. I don't know what to do with the US dollar Mexican peso. I'm not trading it. I'm completely eradicated of pesos right now. I don't know what to do. But 1945 is resistance, support is 19 right now, and I think that's what we have to deal with. Okay, so okay. I'm sorry. Sorry to yawn on you guys. I know it's contagious. My fault. US dollar Norwegian krona. We've been warning about the potential of the false breakdown here, reversal, and once we broke back above 803, we are now at risk of a move up to 820. So we are at risk of a move back to 820. I think 820 is going to be significant for those of you that do not know, because we'll probably be, retesting these trend lines up here. Okay, but I think 820 is possible, especially with a strong NFP. Oops. Now the question is where's support, because I try to think about the guys that are short. Like if you're short and you relate to the party, where would you want to get out? Like if you're short, you got short somewhere down here because you thought the Norwegian krona was just breaking out across the board, and you got short down here, you're going to want out on them back down towards probably 8. Say, oh, thank God we got back to 8. All right, just get me out of this thing. So I think any move back down towards 8 is going to offer some support. I think that you're going to find buyers down there. Okay, we've been bearish. I've got to put us in a range right now because we've proved this week that that this was a false breakdown, the end of last week. So we're back in a range for now. It's real choppy. But see, here's the thing. You want to talk Nordic currencies? Look at the US dollar Swedish krona. Look at this. Look at that. It's a weekly chart. Look at that flag. Look at that. This US dollar Swedish krona is at risk of breaking out. This is, you're looking at 1979 to today. We're really at risk of breaking higher. So I'm going to write down here. I'm going to take that spike out of the equation right now. I'm going to write down 869. If we break that, then we're going to start really cascading higher. Not saying it's going to happen, but possible. Okay. Let's just write 870. And I'm going to keep us in a range, but we're threatening to go bullish after today if we end up breaking higher here. Okay. All right. Support for today. Now we still have I guess the potential of this ascending wave. Well, we kind of broke out already. Shoot, I don't know. Support probably be somewhere down here. So a dip down to 858 probably find some buyers. Now anybody who's stuck short is probably like, okay, if we can just get a dip down there, I'd be happy with getting out of that. All right, there's your bias chart, guys and gals. It's done. Take a picture of it, save it, whatever you're going to do. We're ready. Well, we're as ready as we're going to get, right?